Most investors pick a side before they even understand the game. Either they're all in on crypto, convinced it's the only future that matters, or they're strict traditionalists, index funds only, everything else is noise. Both sides are partially right. And both sides are leaving serious potential on the table. Today I want to make a quieter, more rational argument. If the fundamentals support both assets, why not hold both? Let's start with index funds. They're not exciting. That's exactly why they work. When you invest in a broad market index, you're not betting on one company. You're betting that human productivity and economic growth will trend upward over time. History strongly supports that bet. You get instant diversification across hundreds of companies. You pay almost zero in fees. And data shows, consistently, that most professional fund managers fail to beat the index over the long run. Combine that with a systematic, SIP-style approach, and you're averaging your entry price over time. No emotion, no timing games, just compounding, quietly, steadily, for years. Now crypto. Harder to defend, noisier space. But strip away the noise and the fundamental question is simple. Are networks like Bitcoin and Ethereum solving real problems with real, persistent demand? For select assets, the answer is increasingly yes. Bitcoin offers something the traditional financial system cannot: fixed supply in a world of unlimited money printing, 21 million. No exceptions. That scarcity, in a macro environment built on debt expansion, is structurally significant. Ethereum is programmable infrastructure, the backbone of a parallel financial system being built in real time. And institutionally, Bitcoin spot ETFs are live. Sovereign wealth funds are allocating. This is no longer just retail speculation. Global crypto adoption is still under 5%. Early infrastructure always looks uncertain, until it suddenly doesn't. Here's where it comes together. Index funds and crypto don't move together. They respond differently to the same world. Index funds give you a stable compounding core tied to the real economy. Crypto gives you asymmetric upside tied to an emerging digital economy. Together, they cover two different structural megatrends simultaneously. The sizing matters. This isn't all in on both. A disciplined allocation, perhaps 70 to 80% in index funds and 20 to 30% in fundamentally sound crypto assets, builds a portfolio diversified across types of opportunity, not just sectors. The best financial decisions are rarely the loudest ones. They're made quietly, with clarity about why, patience about when, and discipline about how much. Index funds have compounded wealth for generations. Crypto, in its early but increasingly credible form, may do the same for the next. If the fundamentals support both, hold both. Not out of greed, out of logic. I'm White Fang, and this is how a sniper investor thinks.